Brought to you by Ors May and Associates Business Advisors. Tax Advisory. Let's begin. Navigating the complex world of taxes can be a challenge for many companies. Most companies are structured as a corporation, LLC, or sole proprietorship. And each type of entity comes with its own tax implications. Corporations, small businesses structured as a corporation, are generally established as a C corporation or S corporation. These two types of structures have very different tax implications. With the C corporation, you have to be ready to deal with double taxation. C corporations are taxed at the corporate level, and the management of the company are further taxed at the individual tax rate. As the proprietor of a C corporation, effective cash management and tax planning are essential to success. S corporations have a different tax structure. S corporations do not pay income tax. They are considered to be pass-through entities where the income of the company is passed through to the shareholders. The income taxes are then paid by the shareholder at their ordinary tax rate. Given the right conditions, a C corporation may be a better corporate structure than an S corporation. However, without sufficient tax advisory and planning, the long-term benefits of an S or C corporation may not be identified. We also have LLCs. LLCs are quickly becoming the preferred entities to establish because A. LLCs can be classified as a partnership. B. LLCs can be taxed as an S or C corporation. C. LLCs can remain as a single-member LLC or a disregarded entity. D. LLCs are much easier to maintain than an S or C corporation, which makes LLCs very flexible and provides a multitude of tax strategy possibilities. E. For most common real estate transactions, LLCs are the go-to entity to provide protection for investors. Strategic tax optimization maximizes your eligible deductions, ensuring you retain more of your earnings. With a corporation, LLC, or a combination of the two, the individual taxpayer can have a tremendous amount of opportunities to effectively manage the earnings and reduce their tax liability. This is in addition to charitable giving and trust planning. Compliance becomes a major requirement because of the changing tax laws and regulations. As you continue to diversify your portfolio, increase your income, and purchase more assets, federal and state tax compliance is important to ensure continuous estate protection. This also means you stay compliant while you minimize tax liabilities and financial risk. Proactive tax advisory and planning is not limited to the current year alone. For tax planning to be effective, it must be considered over multiple years. The plan should be reviewed to consider, among others, A. Trust documents are in order and compliant. B. Private foundations adhering to minimum annual distributions. C. Reasonable compensation for the S corporation. D. Effective planning with the C corporation to minimize double tax impact. E. Effective real estate planning by using the LLCs. Effective tax planning does not only affect your cash management, it will also have a direct impact on crucial financial and operations decisions. At Ors May and Associates, we are aware that every business is unique, and so are its tax requirements. With our suite of services, partner with us to maximize your tax benefits. We invest time to understand your goals and objectives. Contact us today. Ors May and Associates, we are committed to your success. Don't forget to like, subscribe, and share.